Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, October the 13th. The year's 2022. Let's talk trading. Assessing the market, part 2 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, you're sitting on your hands.
Yes, I am. Now, I've made, for a couple of reasons. One, I've made goal for the day. Barely made goal, but I got what I tried to go make for the day. So there's no reason to trade, if I don't want to trade. So that's the first reason. The second reason is, good grief. I mean, we're in the middle of an hour right now where if you show that chart, Zero, I mean, I've got 143 pip range for the hour. And okay, that's great if it goes straight up. But if you're looking at the 1 minute of that, I mean, there are places in there where you could see where it ran up 30 pips, 40 pips, and then plummeted right down again, and you and I was sitting on the phone with each other, talking to each other, and we both saw not opportunities, but saw instances where the market literally would run up 10, 15, 20 pips in one tick. That, to me, that's for me. I can't trade that. That's nuts. I think I called out to you that at one point in time I had a spread, I think, of 3.7 or something crazy like that. That's sort of like, during the changeover at the end of the day. That's not normal for right now. So for me, I'm not going to go and trade something that's not normal. I can't do that. To me, that's just way too risky.
Yeah, if you look at the last 10 bars, most of 1 minute bars, most of them were over 10 pips, and we had a couple over 50, or a bunch over 15, and 3 over 20.
Exactly, and it's just like, it's you had made a comment, a few minutes ago where you said this is almost like the old days. And I know what you're referring to. You're referring to back in 2007, 8, 9, that time period when we were having days on the pound where it would move 200-300 pips almost every day. But I think there was a significant difference, though, from back in those days. Back in those days, yeah, the market would move that many pips during the day, but it wasn't nearly as spiky as this. Yeah, there was spikes, don't get me wrong, but it wasn't spikes where it would move 20 pips in a tick. That's just craziness. And I was thinking about this yesterday afternoon. I was just sitting around and doing my analysis of the market, what's going on, that type of thing, and thinking about what's going on. And here's something for all of us to go and when we talk about assessing the market. The stock market, the New York stock market, meaning the Dow, and it actually has more volatility in it right now than Bitcoin does. So right now, the stock market is having more volatility than a speculative, commodity. If you want to classify, Bitcoin as a commodity, I don't know what else to really equate it to. So I like to go and say that it's a commodity. But think about that: a speculative commodity has got less movement than the stock market. Look at gold right now. Gold is stuck in a range from basically 1650 to 1950, and it really isn't moving that much, And again, that's something in these times where there's high inflation, you would expect gold to be going through the roof. For a lot of people would expect it to be going through the roof, and it's not. I mean, we're living in very, very uncertain times, and so for that reason, me being very conservative, I like to be conservative, in what I do. Yeah, and meanwhile, somebody's probably out there laughing at me right now. You're very conservative as you go trade FOREX, But the thing is, you can even go and take markets that are, that move a lot on a percentage-wise basis and still be conservative in it and actually still make money in it. But the thing is, though, when I'm seeing these type of movements where we're not seeing what's normal. And that's the key for me. That's the assessment that I like to do. You know, assessment can go and cover a wide range of things. Assessment can mean I'm going to look at the charts as a whole. You know, you like to go and look at, pivot points and, for the daily pivot points, weekly, 4 hour. I know that you love the 4 hour pivot point, and that's great to go and do. And that's really a good part of doing assessing. But there's another part of assessing, and that's what I like to do, and that is, how is the price action? What is price action doing? Because, you know what, you can know where the pivot point is, and put your TP there. You get a trigger that for whatever reason goes and tells you to go in the direction of that pivot. But if the price action in the market is chaotic, then you could very easily go and actually do everything right, and the market actually even get to where it should have gotten to, and still not get out with a profit. I think you had said before that you were, as an example, you were up like 3-4 pips, and you got nicked for what I think like a tenth or 2/10 or maybe 3/10 of a pip. No, it's 3 or 4 points. And that's the problem with a market like this.
Yeah, in fact, I'm putting up the pivot chart just to show the traders out there that we missed the H4 pivot for this H4. We're 100 and some pips away from it, but there was a missed pivot from back here on October the 6th, and on the H4 candle, and we took it out. And in fact, I think there's a second one here on October the 6th. So, and I had called that out when it was started to go up. But one of the things to note, what happened was the monthly went from red to green today. Back at the, 1160, I believe? Yeah, 1161. So when you're making assessments, it's just like, hey, this thing needs to move. And put that monthly wick up there.
Yeah, that's part of the assessing that you have to do. Has the tide changed? And that's an important part of when you're going in there, and it creates, it can create a bias in your mind, and having a bias can be good or it could be bad, because just because you have a bias doesn't mean that it's going to work out. So so we need to go and be very, very clear about that. But what it does do is that it may give you a slight edge over something else going on, or when you go into a trade. In other words, let's say you get a trigger to go long right now, and you say, okay, we've now crossed over to where now we have a green month, and we have a green day, and we have a green hour. Okay, that's all great, and that may give you that little bit of extra, confidence to go and take the trade. But that still doesn't mean it's going to work out, and that's the part of the assessment factor that I go and hone in as well, because I do both. We all should be doing both. But the second part of it is, okay, it's great, that I got all those factors in my direction. I got lots of green, so let's go long here. Okay, but can I make money? Because that's really the thing that matters, right? I called out before to you that it was going to go and break the 00. It was going to go to 1.12. Okay, and we were still probably, 50, 60 pips away from it. But to me, it was my assessment of what was going on. That's what it was going to do. And it certainly did that by a long shot. But the thing is, just going long because it's going to get there doesn't necessarily mean that you can make money. And you say, well, why do you say something as crazy as that? Especially since it's broken that 1.12 by 65 pips right now. Right now it's 65, and before that it was a lot more than that. Well, the thing is, how much did it go down below that, wherever you made your entry at? Did it take out your stop, and therefore you took a loss? And why did it take out that stop? Right now, markets seem to be calming down a little bit, but there was periods of time in there where it would move, easily 10 pips in a single tick, and sometimes a lot more than that. Well, what if that single tick move was against where you were expecting the market to go? Well, now you've just taken a loss, and one loss, big deal. But what if you did this 2 or 3 times? Well, now you're done for the day.
Yeah.
At least in my book, you're done for the day.
Yeah, it was interesting because I would imagine the Bank of England probably did something, because all of the pound pairs have moved hundreds of pips, and no other pair looked like that. So there's something definitely going on with the pound.
Yeah, Bank of England, if that's what I haven't looked to see what the other pairs are doing, but if that's what's happening, where the pound just, on every single of the majors anyway, went through the roof, and the other pairs have stayed consistent. Well, that means either one or two things. Either the Bank of England has done something, or the British government has done something. One or the other.
Right.
Because they're the only two that could actually make it move out like that.
No, but all the pound pairs, not just the majors, but all of the pound pairs are the only pairs over 100 pips. And
Right.
And other than the EUR, GBP, everything's over 200 pips. With the beast, the pound yen, clocking in at 334 pips right now. So yeah, something happened. Something was going on there.
Yeah, something positive for the British economy, or somebody discovered something in some report, and a rumor mill started, with the FOREX traders over in Britain. And for that matter, the problem is that if that starts to happen, over there, well, we're talking right now where it's a little bit after 8 o'clock Eastern time. Well, the New York traders may not be trading, but what they are doing is they're doing their assessment right now. They're sitting at their desks, and if they see something that their British counterparts are doing, well, guess what? They're going to react to that as well, even though they're technically not trading at this point in time. They'll start trading early if they see something that's significant.
Right.
They got to go in safe positions.
Exactly. I mean, last hour we had the range was 143 pips. That was bigger than some of the days. It's just nuts.
Yeah, you think about what Monday's day was only 92 pips, and but the funny part is, if you go back to like June and July, 92 pip day on the pound was actually was a nice sized day.
Yeah, if you look at the last 10 days, only one day was under 100, and only 2 were under 200 pips. So there's been a lot of range on the pound lately. A lot.
Oh yeah, it's just being crazy, which is good, because in one sense, here's the thing, like right now my spread it's still pretty large. It's about 1.7, 1.9, something like that, which is pretty large for my broker. But it's not that crazy 3.7 type of thing. And we're getting big movements right now, sometimes of 4 pips or 5 pips. But for the most part, it is slowed down from the absolute craziness that was going on, a half hour ago. And so for that reason, what I'd like to go and say is that, well, you may not go and jump into a trade and make 40 pips in one tick, but the thing is, you can go and jump in it, because now start saying, okay, the market's starting to settle down a little bit. It's probably going to go and react in some way now based on what just happened. Something has to happen right now, because it moved, the thing that it moved 140 pips in an hour. Well, there's going to be a reaction to that, because there are big people out there with lots of deep pockets out there that are probably caught with their shorts down. And they need to go and somehow recover that. And they may recover it by putting on opposite trades. They may recover it by going and trying to force the market down. But usually when they're in this situation like this right now, the way it's done is it's done in a more methodical way.
That's right. And you know something? The fastest 15 minutes in trading is up. So, fellow traders, if you assess the market and you see something's not normal, not right, you don't feel comfortable, take a clue from Walmal and sit on your hands, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.